What is an aggressive investment portfolio? Aggressive portfolios mainly consist of equities, so their value can fluctuate wildly from day to day. They are characterized by a high level of risk tolerance and a focus on long-term capital growth. Aggressive portfolio has 25% to 30% fixed income securities and 5% to 10% cash and equivalents and 60% to 65% equities. There are 6 aspects that needs to be considered about an aggressive investment portfolio. They are risk profile, asset allocation, investment strategy, time horizon, monitoring and rebalancing, and considerations. Risk profile. Aggressive portfolios typically have a high risk tolerance, meaning investors are willing to accept greater volatility and potential losses in exchange for the possibility of higher returns. These portfolios often invest in high-risk assets such as stocks of emerging companies or sectors, speculative investments, and alternative assets.
Asset allocation. Aggressive portfolios are heavily weighted towards growth-oriented investments such as equities, real estate, and high-yield bonds. The allocation is skewed towards assets with higher return potential but also higher volatility. The goal is to maximize capital appreciation over the long term. Investment strategy. The investment strategy for an aggressive portfolio often involves a buy and hold approach with a focus on long-term growth. Investors may be willing to take concentrated positions in individual stocks or sectors to capitalize on high growth opportunities. Diversification is still important to manage risk, but the focus is on growth rather than stability. Time horizon. An aggressive portfolio is best suited for investors with a long time horizon, typically more than 10 years. This allows for the portfolio to weather market downturns and benefit from the compounding growth potential of higher risk, high reward investments over an extended period.
Monitoring and rebalancing. Regular monitoring and periodic rebalancing are crucial for an aggressive portfolio to ensure that the risk levels aligned with investors' risk tolerance and investment goals. As market conditions change, adjustment may be needed to maintain the desired asset allocation.
Considerations. It's important for investors to carefully assess their risk appetite, financial goals, and investment time horizon before opting for an aggressive portfolio. While the potential for high returns exists, there is also a greater risk of significant losses during market downturns. Therefore, thorough research, disciplined management, and staying informed are essential for navigating an aggressive investment strategy successfully.
Overall, an aggressive investment portfolio is suited for investors seeking high growth potential and are comfortable with associated risks and volatility. It's important to align the portfolio with your individual financial goals, risk tolerance, and time horizon to ensure a suitable and effective investment approach.